Oh, we are on the Money Watch, and we welcome CBS News business analyst Jill Schlesinger. She joins us now to break down what happened on Wall Street yesterday and what we can expect today, which Jill already seems to be shaping up to be a busy morning. Thanks for joining us here. This sell-off is strongly linked, of course, to the president's tariff fears. In fact, it looks like there's some breaking news right now that he's announced even more tariffs on Canada. People are throwing around the word recession. What are your thoughts on all of this?
Well, the morning's news was not great because when you have an escalation of this tariff tit for tat, it really puts investors on edge. So, going back a few weeks, I think what's clear is that there's been this cloud of uncertainty that hangs over the stock market. And, remember, go back to the election, we had stock prices run up. The theory was, hey, there's going to be much less regulation, that tax policy is going to be very much in favor of corporations, and this will be a path forward for companies to make even more money. Flash forward just a few months, and where we stand is that we've got an actual tariff situation where it seems to be escalating. This morning, the president just announcing an additional 25% of tariffs on Canadian aluminum and steel on top of 25% tariffs that exist right now. And we also understand that there is a real effort among the government to cut its spending by reducing headcount. And I'll put it all together, and what you have is a bunch of consumers who are worried about prices going up, and they're starting to pull back their spending. So where we are this minute is this, again, fear that some of these presidential actions, executive orders, are going to start damaging the economy, hurt consumers, make companies think twice before they start hiring. And then, of course, the ultimate fear is that we head into a recession. We're not there yet, but all this anxiety, that's what's working through markets right now.
Jill, do you see all of this leading to what will be a bear market?
Well, a correction is a 10% drop from the recent highs. And the NASDAQ composite has already done that. NASDAQ's already down 13.5% from its recent highs at the end of last year. Whether the larger stocks, maybe that would be represented by the S&P 500. If we go to 10%, that could happen today, obviously. A bear market is a 20% drop. And, the last bear market we had was back in 2022 when stocks were down about 25% overall for the year. And it was an uncomfortable year, but we did bounce back from it. So as an investor, what I encourage people to do is to remind yourself you're probably in this for the long term. If you needed some money within the near term, you shouldn't have it invested in risky stuff. Try to take a deep breath. Unfortunately, going through down markets, it's kind of the price of admission that you have to pay to be a long-term investor. So try to tune out the noise, concentrate on what you can control, stick to your game plan. And listen, if you're putting money in your 401k or your 403b, you are getting some assets at discounts. So I guess that's the good news.
And Jill, I know you have something called a PPP. I heard you talk about it the other day, the Panic Protection Plan. If you can just kind of walk us through that, because there are people who are really afraid, but you shared some kind of great tips that might help people feel better.
Yeah, listen, I developed this a long time ago. In fact, about 25 years ago when people were going through the tech boom and bust, and then again in the 2008 financial crisis. I take it out every so often, dust it off and update it. This is really a way to get people to focus on things that can really help improve their lives that have nothing to do with the stock market. So what I try to tell people is the first step is to concentrate on your big three. Make sure you've got that emergency reserve fund of 6 to 12 months in a safe checking, savings, money market, short-term CDs. If you've got that, that's great. It really does help soothe the nerves. Next step would be to really focus on trying to whittle away debt. And I'm talking about, credit card balances or an auto loan or a high-interest student loan. If you can do that, you'll start to feel much more comfortable, especially if we head into a recession or a slowdown of some kind. And the third thing is that if those first two things are taken care of, then, hey, you know what you want to do? Maybe you just want to push up your contributions in your retirement plan to the best of your ability. And I think that when you do those kinds of you take those kinds of actions, they're proactive, they're a good reminder of what you can control. And for many people, I know you want to do something in your retirement accounts. You want to move some stuff around. Try not to do that. Look, that's called market timing. No one really knows when to get out and get back in. Your best bet is stick to your game plan over the long term. It really does work, notwithstanding these horrible periods. And I know this causes panic and anxiety. Just try to take a deep breath, try not to be too reactive.
Sure. Stay the course, and that kind of planning always makes people feel a little bit better. CBS News business analyst Jill Schlesinger, thank you for chatting with us. Appreciate your insight.
Sure. Thank you.